Hey everyone, it's Friday, it's 11:50. Wanted to shoot this video before market close just because I know you're curious watching the action, seeing your texts come through and stuff about markets kind of going crazy. So um, there's more tension in the Ukraine. There's a video circulating of the Ukrainian delegate punching the Russian delegate in the face during the Black Sea negotiations. And also there's news this morning that that broke down and that Russia is sending warships into the Black Sea, which obviously makes commerce more and more difficult. And that impacts fertilizer, it impacts corn, it impacts wheat, and who knows what else it impacts, but it's at least significant. Now, what else is going on are the completion of some what we think are fairly big deals on the weekly charts, and I want to go through that. But first, let me show you the dailies. This is new crop soybeans. We're retracing 38.2% of the decline that started from back here, and this is chart is starting to turn a little bit more bullish. We're not back to our cloud yet. Let me show you where that is. So a little bit more action needs to happen here before corn or before beans really turn bullish. But with what else is going on, I think it's prudent and safe to think that this double bottom is going to hold for at least a period of time. You know, this business is all about risk reward, and where our system and our preference is to exit positions up in here towards the 1295 level at our line. Sometimes we want to be realistic and recognize that some things outside might be influencing the market too, and you may see a bottom form in other places. So I would not be a bit surprised to see us rally additionally from here. I'm not seeing any evidence of, you know, really collapsing balance sheets moving forward, but if the market gets nervous, that doesn't mean it can't go higher. So beans are the weakest among all things so far, but they're not weak enough to say, hey, we need to hold these and just be short. Let me show you the weekly chart of this contract. Get this Fibonacci alpha here. From a weekly perspective, soybeans are posting a reversal. This is the weakest chart I'll show you. Obviously, we didn't quite make a new low. We didn't make a new low below this, and we haven't made a new low down here. And so a reversal from this level really doesn't mean a whole lot unless you think of it in terms of a truncation, which would be that we came down in a wave A of 4, we moved up in a wave B or a wave A, here's a wave B, and now we have a wave C. And if a wave C fails to take out the prior wave A extreme, then it would be what's called a truncation. Now, we have not been viewing this market that way at all. We've been viewing this as a 1, here's a 2, and then you have a 1, 2, and now we've started a wave 3 decline. The problem with that logic is that if you have that, then you shouldn't see a reversal action, and you shouldn't see any of this area back in here violated. So to me, the best reading of this is that this might become a truncation, and follow through strength back up above the 1303 level might help to confirm that. So soybeans are turning more neutral, maybe potentially turning more bullish as we move forward. Now, let me show you what corn is doing. And this is our daily chart. We've been showing you these charts for most of this week, right? Showing the divergences and talking about how it could bottom. Let me take these off of here so we have a little bit more screen to work with here. We do have a low in place here. Let me pull this out to the weekly chart of July. Weekly chart of July corn is a little different than the bean chart because we did take out the extreme of this prior wave, and now we've reversed from it and traded back up above it. And we're doing so in a hook reversal. And what this is, if you look at this little pattern, if we find strength up out of here next week and take this out, this is called a 3 inside up formation and could trigger a much more bullish response. So as far as old crop corn goes, what was super bearish earlier in the week is now turning more bullish because price action is determining that, okay? And so we could see a move start up here because these wave counts actually work from a bullish scenario, that this could we could actually propel this market significantly higher. Okay, so these charts just get more bullish the more I show you here. Okay, so I will this is December corn. This is the weekly chart of December, and we have been viewing this as a 1, 2. Then this base channel, we fell out the base channel. We're below our hedge lines, and then we collapsed the market earlier this week. Well, what we've now done is reversed it right at a Fibonacci number of 1.382 off of this decline, which is a significant deal on its own. But we also did it right on the top of, right inside this trading range, right back here, that was set back in November of 21 against this contract. And this wave right here would be in a wave 4 position before we propelled ourselves higher. And this is also completing a wave 4 here. So it's too early to say, hey, this is a done deal and we got to go higher. But this is significant enough for us to say, okay, we're going to cover our shorts. We're going to go ahead and cover the short positions that we have and exit our short hedges, because if we do find follow through, we have the same setup on new crop corn that we do on old, which would be a hook reversal, reclaiming territory that was been previously lost, right? That's significant. And then if we find strength up above 550, now we've completed a bear trap, which would be back above this swing low right here and above this low, and it would also complete a 3 inside up on the new crop corn weekly chart as well, which would be super bullish. So we've been struggling with this all week, is to say, hey, do we go ahead and front run it and say we're just going to lift our hedges down here, or do we wait for that confirmation before we take action? And I've been in the camp of let's wait for confirmation. Until today, we've changed our mind and said, you know what, we're just going to go ahead and move it. And here is why we changed our mind. This is Kansas City wheat. Obviously, we've had a nice 3-day up move, but I want to show you the weekly chart, because this one is pretty significant in my opinion, which is we have a divergence on the RSI, we have a divergence on the stochastics, we have divergence on the force index on the weekly charts. These divergences are long-lasting and have stayed around a long time. We now have a red 13. We have traded below the trading range that we've been looking to break out of. We've reversed from that low, from that breakout, confirming it as false. We've reversed all the way back to the peak of last week, and we're taking out the week prior to that's low as well. So now we have an outside bar, double close, key reversal on a 13, right above the wave, prior wave 4 extreme, before we propelled this thing significantly higher with all of these divergences. That's something that we cannot ignore. So we want to buy in any of our old crop wheat. That's a signal that until it goes away, we need to go with, because it could be fairly powerful. It doesn't mean it has to go up, right? Just because the signal confirms, that does not mean it's got to go up. There's risk in everything, but that is literally everything that we look at. We have we're above our daily cloud. We have bullish divergences. We have outside bar key reversals. We have 13s. We have completed wave counts. We've held support. We've versed from an area back up and confirmed a bear trap. Wheat is a go signal here on all accounts, and something that that we don't want to ignore. And I think that spills over into corn, and I think that spills over into new crop corn. Even though our balance sheet is still burdensome and we don't have any evidence of it contracting, the technicals are leading us to this conclusion, and it's something that we've got to go ahead and follow. So here in 9 minutes, I hope I did a good enough job of explaining why we're turning short-term bullish here, potentially longer-term, because these are significant signals coming off of these weekly charts. And as you know from time frames, the higher the time frame, the more significant and weight you give it in your analysis. So double close, outside bar key reversal combinations with 13s and bullish divergences on wheat is enough for me to get bullish wheat. And the same thing's happening with corn, same thing's happening in soybeans as well, although it's in that order, right? Wheat, then corn, then beans. So we'll take it a week at a time, a day at a time, and we'll see what price action does. But at this moment, in order for us to turn bearish, we have to see price action take us back out of these positions and nullify that that analysis. And price action above on corn, on old crop corn above 616 is significant enough to reignite a buy signal, and on December corn, it's 548 or we'll call it 550 for good measure. Anything above that is super bullish, and we are front running it here just a little bit. So with that, that's the analysis. I hope that's somewhat helpful for you. I want to get this out before the market closes so you can take action. If you wait until Monday and we are lucky enough to get a break back down just a little bit, midway back down below to this bar or something, then that would be an even better entry point, because until that low is gone, this analysis holds. And unless we get something else that nullifies it, right? But really, from a price action standpoint, that low is significant, and it's growing more significant every point we go higher. All right, that's all I got for you. There's risk trading futures and options, and you should only do so in light of your own financial condition. And you should be mindful of that past performance is never indicative of future results, and no signals guaranteed of any kind. We find them to be persuasive and enough to take action on, and so that's why we do that. Hope you guys have a great weekend. We'll talk to you later.